Good morning, everyone. On behalf of the entire team, I would like to welcome you to Aegon's Analysts and Investor Conference. We will start with 3 plenary presentations, beginning with our CEO, Alex Wynaendts. He will update you on the progress we've made on executing on our strategy and delivering on our financial targets. Then, Mark Mullen and Michiel van Katwijk, the CEO and CFO of Aegon's business here in the US, will take you through the most recent developments and outlook for Transamerica. Together with Alex, they will take your questions after their presentations. Subsequently, those of you who are present here today will get ample time to discuss the developments and prospects of our US business with a wider US management team during the breakout sessions. We would appreciate it if you take a moment to review the disclaimer on forward-looking statements at the back of each presentation. And with that, I would like to hand it over to Alex.
Thank you, Willem, and good morning to all of you. And also good morning or good afternoon to the ones joining here through the webcast. It's always great to see a lot of familiar faces here also in New York. And I'm pleased to be able to present today with our US team. So our US team today and I are looking forward to taking you through our strategy, but also sharing with you how we will grow our business and create value for all our stakeholders. So I will start by providing you with an update on the progress we've been making on our 2018 group targets. Then I will highlight the very strategic steps we've taken to simplify business and support future growth across the group. And thereafter, I'll hand it over to Mark and Michiel, CEO and CFO of our US business. Mark and Michiel will focus on Transamerica and further outline how we are well positioned to capture the attractive growth opportunities here in the US. In addition, they will discuss the financials, including capital management and capital generation. So let me start by taking you through the progress we've made as a group over the last couple of years. We have simplified our business through a series of divestments, simplification of legal structures, particularly here in the US, and through significant cost savings and capital efficiency measures. In addition, we have solidified the group's capital position and increased the group's capital generation. The increased capital generation across our various units not only results in sustainable and diversified remittances to the holding, but it also is the foundation for future growth as we invest a significant part of our capital generation back into our own existing businesses. Furthermore, we have significantly reduced our leverage ratio in recent years, which has resulted in lower funding expenses and increased financial flexibility. As a result of these management actions, we have made strong progress on our 2018 financial targets, on which I will elaborate further shortly. I'm also pleased with how we are transforming our company into a technology-driven and agile business, as a result of which we are now better placed to help our customers achieve a lifetime of financial security. And that's our purpose. That's what we're here for. And I'm proud that how we are helping almost 30 million customers around the world. I would now like to move on the next part of my presentation and highlight the actions we are taking to simplify and grow our business and how this leads to a sustainable increase in our capital generation. As you can see on this slide, we have made substantial progress over the last couple of years in optimizing our broad portfolio of businesses. We will continue to rationalize our geographical footprint by focusing our resources on our key markets. Since 2016, we've exited insurance operations in another 3 countries. In addition, we have sold non-core businesses in our main markets, such as the annuity book in the UK, our broker UMG in the Netherlands, and Transamerica Financial Advisors here in the US. Also in the US, we have reduced capital allocated to our run-off businesses by $1.3 billion, exceeding our target of $1 billion, a full 12 months ahead of our 2018 target. And we were able to complete these divestments on average close to book value, representing attractive valuation. By targeting specific acquisition opportunities in our key markets, we've also been able to attract millions of new customers and 100 billion euros of additional assets. These acquisitions add new capabilities and scale to existing businesses where we have leading positions and where we can leverage existing infrastructure. A good example outside of the US is the business transformation we've implemented in the UK. By selling our annuity book and by acquiring Cofunds and BlackRock's DC business, we have transformed our business from a largely traditional pension business into the leading platform business in the UK with some 120 billion pounds of assets under administration. In addition to optimizing our portfolio businesses, we're also rationalizing our legal structures. This will give us 3 material benefits. So first, by simplifying the legal structures, we are reducing complexity. Second, we are generating additional expense savings. And lastly, and third, we're freeing up capital. Up until now, we have released $1 billion following the recently announced elimination of a variable annuity captive in the United States. And we intend to further simplify US operations by merging 2 of our life insurance companies in 2019. This is expected to generate a one-time capital benefit of approximately $200 million as a result of diversification benefits. And Michiel will elaborate further on this in his presentation. We are also creating value through optimizing our in-force business. And I would like to share just a few examples of how we are managing our in-force business for value. We have reduced expenses and will continue to do so. And by the end of 2018, we expect to achieve our 350 million euro group-wide expense savings target. In addition, we expect to generate a total of 90 million pounds of expense savings in the UK following the integration of Cofunds and following the recently announced outsourcing agreement with Atos. To date, we have realized over 20 million pounds of saving related to the Cofunds integration. Another example is in Asia, where we have upstreamed $200 million to the group in 2017 following a capital efficiency program in our high net worth business. Furthermore, we have restructured our direct marketing business and activities in other parts of Asia, as a result of which Asia is now positively contributing to the group's capital generation. And in the US, we are, as you're well aware, actively pursuing rate increases on long-term care policies and also increasing the monthly deduction rates on certain blocks of universal life products. So as you can see, in the past years, we've worked hard on rationalizing our portfolio businesses and on protecting and enhancing the value of our in-force business. As a result, we are now in a strong position to focus our efforts on growing our business in all our key markets. And on the next slides, I will summarize what steps we are taking to grow our business in our key markets. Through outsourcing, technology upgrades, and the consolidation of administrative systems, we're not only simplifying our back office systems and generating significant efficiency gains, but very importantly, we're also modernizing our business that allows us to drive future growth. Let me give you just a few examples from our largest business units. Here in the US, we are partnering with TCS on the administration of life and annuity policies. And as part of this transaction, these policies will move from 26 existing administrative systems to one modern target system. And the US team will talk more about this. In the Netherlands, we're consolidating the administration of pension products onto the systems of our well-regarded specialized subsidiary called TKP. And in the UK, we have developed a market-leading platform to serve advisors, employers, and individual customers. As I'm sure you're all aware, we are now migrating Cofunds customers to this platform. We've also recently announced an extension to the agreement we have with Atos to service and administer our non-platform customers, and I will share more details about this on the next slide. All these actions represent major strategic steps forward as we're able to take out expenses, free up resources to focus on improving customer experience, but also to reducing the time to market for new products. So 2 weeks ago, we announced an extension of our partnership with Atos with an agreement to service and administer our non-platform customers in the UK. This agreement is beneficial to all stakeholders, as we will further improve customer service for some 1.4 million customers, deliver significant financial benefits, and we will be able to retain jobs in the region, in Scotland and Edinburgh, as approximately 800 people will transfer to Atos. As a result of this transaction, we expect to realize annual expense savings of £30 million within 3 years, or over £400 million over the duration of the contract. And this corresponds to approximately a 40% reduction in cost per policy. On a Solvency II basis, we expect to realize an additional capital benefit of over £100 million over the coming years. Another important benefit of outsourcing, when compared to the alternative of selling the book of businesses, is the fact that we will continue to be the asset manager for this business. And as a result, we are retaining asset management fees of approximately £25 million per year. Going forward, we will continue to invest in modernization and growth. The growth opportunities on which the US management team will elaborate further in their presentations are in 3 core areas. 1, the workplace market, in which we're offering integrated solutions to our customers by leveraging product knowledge, scale, and market-leading technology across all our businesses. 2, the individual market, where we are launching new innovative products and adapting pricing to improve our competitive position, while at the same time we're still meeting our internal hurdle rate and payback period requirements. And 3, advice, guidance, and experience, where we want to strengthen our relationship with our customers by increasing advice we offer across all products. We have established ourselves in recent years as one of the few companies here in the US that offers a full suite of products. And this enables us to roll out our wealth and health strategy and provides us with a distinctive competitive advantage. As you'll hear from Mark and his team, this strategy resonates well with advisors, employees, and customers. And we're introducing the successful concept into our key other markets around the world. As I hope I made clear on the previous slides, there are many benefits in simplifying our business, such as increasing efficiency, reducing operational risk, and freeing up resources that we can better use elsewhere to improve customers' experience. This will allow us to focus our efforts on growing our business by increasing revenues and profitability. Growing our business is key to sustainably increasing capital generation and, ultimately, remittances to the holding. And slide 10 clearly shows that we have significantly increased our capital generation. Business growth and in-force management led to an increase of our capital generation to 1.5 billion euros. As a result, the level of free cash flow as a percentage of SCR has now grown to 15%. In recent years, we significantly increased our Solvency II ratio through business ratio rationalization, divestments, and de-risking. All our main units are now within or above their target zone, providing a robust foundation to remit capital to the holding. The management actions we've taken also led to a strong increase in the quality of our capital. The unrestricted Tier 1 as the percentage of SCR increased over 40 percentage points to 150% since the implementation of Solvency II in 2016. And in addition, we have successfully reduced our leverage ratio to the lower end of the target range in 2018. And over the coming years, the leverage ratio is expected to gradually reduce further. On slide 11, you can see that we've made strong progress towards achieving our 2018 financial targets. As of the first half of 2018, we had realized 325 million euros of run rate annualized expense savings. The US will most likely fall somewhat short of their $300 million target for year end, 2018. However, the shortfall will be made up by the Netherlands, keeping us well on track to achieve our target of 350 million euros. Furthermore, the many management actions have allowed us to increase capital return to our shareholders in line with our 2.1 billion euros target. And in terms of return of equity, we've had headwinds. In 2017, we injected 1 billion euros in our Dutch business, leading to a higher level of capital than we had foreseen. And we've also experienced lower sales momentum and delays in the integration of co-funds in the UK. Despite these headwinds, we've been able to increase our group return on equity and have made significant progress toward achieving our 10% target. At the presentation of our second half 2018 results in February, we will provide you with our new group targets. So before I hand over to Mark, let me briefly share with you why we are excited to have such a strong franchise in the United States. Transamerica is uniquely positioned in the US market and makes a very significant contribution to the overall group. In line with the group's return on equity target of 10%, the US achieved a 9% return on capital. The US business increased its capital position significantly with an RBC ratio of 490% at the end of the first half of 2018. And this is one of the key drivers behind a solid capital position of the group. Significant remittances from the US business over the course of the year supports the capital return to our shareholders. Our US business remitted $13 billion to the holding since 2010. Transamerica is a top 10 insurance and retirement company in what is the largest and still growing financial services market in the world. And last but not least, Transamerica is an iconic and trusted brand with around 7,000 skilled employees servicing over 13 million customers who trust us with their financial well-being every day. And these are just a few reasons why I'm proud of our Transamerica franchise. And I hope that through the presentation and by answering your questions, we can confirm why our business is well positioned and why we are very confident of our prospects as we look to the future. So thank you again for your interest. And it's now my pleasure to hand it over to Mark. Thank you. Thank you.